Hi, this is Zak Mir from Master Investor, the Retail Investor Conference on April the 25th. And we're starting off with Petro as the bulletin board hero of the day. Here we saw a decent spike towards 7 pence, which looks like it's the top of a September rising trend channel, back towards the old January resistance 4.8 pence, and the RSI currently very overbought. So one would expect to see some consolidation or even a slight pullback from current levels to cool off the RSI before any new leg to the upside. The floor of last year's channel does run towards 4 pence, and at least while we're above that, one would give the benefit of the doubt to the upside and a retest at least of 7 pence. But the big story here, really from a charting perspective, is that it looks like we're mapping out the right-hand side of a U-shaped reversal or a saucer-shaped reversal, something which could lead the shares back up to 10 to 12 pence over the next couple of months. Clearly, the big trigger on that idea would be clearing yesterday's high at 7 pence. Next up is Premier, where we've got a situation that looks as though it's finally kicking in for the bulls. The low last year was around 0.5 pence, but had higher lows since then, over 0.6 and 0.7 pence. The key event this week so far is clearly the end of day close above the 200-day moving average at 1.03 pence. We want to see proper consolidation around these levels, or at least above the 200-day moving average over the next few sessions. As you can see, over December and January, the breaks through the 200-day line were actually shorting opportunities rather than triggers to go long. But at least while there's no end of day close back below the 50-day moving average at 0.89 pence, we would regard this as a breakout situation or a recovery situation, especially after this RSI bounce off the neutral 50 level, which is normally a reliable leading indicator on the upside. Target here, the top of last May's rising trend channel as high as 2 pence, while the shares remain over the 50-day moving average, and the time frame may be the next couple of months on that as well. Stock in the news, obviously, at the moment, generating a lot of interest is Quindell. Quite interesting in terms of yesterday's price action. Made a video on this quite early yesterday, but in fact, what happened after that was that the gap down to towards 100 pence was actually filled. The shares opened around 120 and then back went back off that. But the view now is that we've actually tested this old resistance line from last year towards 100 pence as new support, and at least while we remain above that, one would be looking for firstly a retest of the 200-day moving average at 133 pence. That was also the January resistance, and after that as high as £1.60, which would be the top of a rising trend channel from December. That isn't to say that the downtrend here is finally over, but there could be some further moves to the upside, even if the shares don't manage to resurrect themselves on a permanent basis after the latest developments. Next up is Sefton, which is another situation where we're looking for a potential recovery. I think in the last update, I was looking for the 20-day and the 50-day moving averages to be cleared. That happened yesterday. And what's interesting about this is that the 50-day moving average is actually rising now. So that is quite encouraging in terms of the price action, as is the RSI pushing through neutral 50 to stand at 56. That should provide further momentum over the next few sessions. Best case scenario here is that while we're above the 20-day moving average, that's 0.08 pence, we could hit the top of this rising 2014 price channel up to 0.2 pence over the next 1 to 2 months. UKOG is an interesting situation at the moment in terms of also this sort of dance around the 200-day moving average. 0.8 pence was the target when the shares were towards 0.6 pence earlier this month, so we managed to achieve the first technical target. This looks like a mid-move consolidation ahead of a similar move to this that we've seen, sort of 0.3, 0.4 pence rally coming up once we break above the flag at 0.9 pence. 1.2 pence is the target at the top of this rising trend channel from the end of last year, and we're backed by the way that all the near-term moving averages, the 50, the 20, and the 10, are rising quite sharply. At this stage, only really back below the 10-day average at 0.65 pence would delay the prospect of 1.2 pence plus. Finishing off with stock which is in quite sprightly form at the moment. and that is Wolfe Minerals. Looks as though we are just breaking out of this particular bull flag that has been in place over the last few weeks. Situation now really, in fact, the old target was 22 pence. In fact, now we're looking for as high as 25 or 26 pence, which would be this April resistance line projection from last year. What's also exciting is the way that the 50-day and the 200-day moving averages here in black and blue respectively are also both rising. So we're in the run up to a likely golden cross buy signal, one which should sort of ease the fears of anybody worrying about the shares having gone up too far and too fast. This looks like a mid-move consolidation and a reasonable amount of further upside to come. That's it from me. More updates at masterinvestor.co.uk.